And welcome to the VSA Capital Tech and Transitional Energy Podcast. It's Thursday, January the 19th. Phil, it feels like months since we last did this.
Andrew, it is a long time ago, pre-Christmas, and lots has been happening, and it's good to have you back on board.
Well, it's maybe worth just mentioning that obviously we paused for Christmas and the New Year. And then I've been out traveling in the United States. I spent the weekend in Asheville, which was fascinating, the home of the Vanderbilt family. A lovely little town as well. But then I went to St. Louis, Boston, Philadelphia, and New York on a bit of a marketing trip. And there were two things in particular that I would perhaps mention that became increasingly clear. Is one of the things I did was I took out the marketing book for our Aquis showcase, which we held back in November, very successful event. And the first thing is various people were flicking through it. They were going, my God, these companies are cheap. How do we buy them? So I was explaining how to do that. And actually, secondly, they were all raving about the Aquis market because obviously they all understand NASDAQ and how it started. And, so they said, God, this is just like how NASDAQ started. It's going to become a NASDAQ. And they also said, thank God, because we can't stand the London Stock Exchange and we hate AIM. There really is a complete dislike for it. And there's, as they put it, this bloody, stupid, no bad system you have. That was probably a terrible American accent, but there you are. I apologize for that. Anyway, look, there's no question about, I was talking through some of the companies in that booklet and they were looking at it. And so if anybody's got a copy of the booklet, they should probably look at it and try and work out which companies certain American people are probably now having a look at, thinking, how can we get someone to buy them? But I'll let everybody else work that out. I'm certainly not going to say it in public on this podcast.
No, don't do that. And of course, we know the US has been running a rule and very active in the UK markets in terms of M&A. So it sounds like some very interesting discussions there.
Yeah, another word. And look, the market obviously has started pretty strongly, particularly in certain small cap names, which is nice to see. It's certain places it's probably run slightly ahead of itself, I feel. So do tread a little bit carefully. We're not completely out of the woods yet, but I certainly think that there is a little bit more liquidity around in the market as we speak today, which is always good. So fingers crossed, we're on for a better year.
Yeah, that's definitely the hope. And as you say, there's been a pretty good start in the markets. Yeah.
And actually, I'd have to say that I think that our space of transitional energy, talking around, people do feel that this could be the year that it delivers. Again, I think I've probably said this on a podcast before, but I view the whole sort of transitional energy situation very much like the dot-com boom and the internet. Everyone in 1999 got incredibly excited about the internet, race stocks up to crazy levels. And of course, it doesn't happen overnight. So then we had the dot-com crash. But the good companies, yes, they all crashed, but went on to go to even higher levels later. We will see the same in transitional energy. It all got revved up and then didn't deliver in 2 nights. So it all came crashing back down again. But actually, again, the good companies will go on to be incredibly successful and should be followed now. And I think we are starting to, I think this is the year you'll start to see that.
Yeah, I think we've also seen, Andrew, is energy and energy supply has been so much in the news globally that's also going to be quite a driver that we didn't have before, maybe.
Well, again, I think it's all there. We are seeing, I saw a fantastic chart actually. I don't know if you saw it, Phil, on the sort of amount of money in energy storage sector, corporate funding at all-time high in 2022. It wasn't just an all-time high. It was a massive increase, and corporate funding for energy storage companies reached more than $26 billion worldwide in 2022. That is a huge amount of money, and it's actually going to grow in 2023. We really are starting to see it take off. Sorry, excuse my cough. Whilst we're talking about energy storage, though, of course, we probably should mention our favorite corporate client, Infinity Energy Systems, because they have had a few announcements out this week, haven't they, Phil?
Yeah, they have. Yes, indeed. They signed a distribution agreement in the UK. It was a memorandum of understanding, as we call it. That's with the Dawson Group Power Solutions Limited. like Dawson Group PLC, and Dawson Group, maybe not a widely known name, but turnover, they have sales of over £300 million, and they lease out all sorts of equipment into the markets, and now the intention is to lease out Inventor's battery storage system. So quite exciting news from there.
And actually, just on that, I'll tell you what. I have been saying to these guys for ages, go into the rental market. And the reason I say is, one of the reasons people aren't buying vanadium flow batteries, they say, oh, the capex is so high. We don't want to pay the money up front. Well, if you turn the clock back, and you and I will remember this, when we were young, you had exactly the same problem with a colour TV. It was very, very expensive. And you also always thought that, well, the technology is going to move on. If I buy one now, it'll be out of date in a year. So we all rented Granada Rentals and all these, rental companies, until the cost got to a level we thought, oh, damn it, we can just buy it and it doesn't matter, we throw it away in a year's time. You've got exactly the same with vanadium flow batteries. The capex cost is very high, and of course they're improving so rapidly. You think, well, if I buy one now, I might want to replace it with one of the better ones in a few years' time. The rental solution is so obvious and such a good way of doing it. And right now, with the way power prices, particularly in the UK, are going, you can make an absolute fortune just parking a box in a field. So I'm really pleased they've announced it. I think it will be a major positive step forward for them. But then they also had some other news, didn't they?
Yes, they did, and that's to do with the it's UK government's long duration energy storage competition, and they've made it through to phase 2 of that competition. And the government, the intention is that the government will provide up to £11 million of matched funding for whoever the winner is. Of a storage project, and Invinity have already lined up a partner should they win for such a project. And the fact they've reached phase 2 is good news. So we hope to hear results of that. I think they said in a few months' time, but that could certainly provide upside to the business.
Yeah, and we're obviously just doing sort of the week we just had, but I mean, since the new year, they put out quite a few announcements, haven't they? Just of big orders, in particular coming out of Asia. South Korea and Taiwan. It really does feel that momentum's going now, and the orders are coming through. You just can't argue with the fact that this is a product that works and people want to buy it. Well, that's incredibly valuable. But probably enough said on that one. But whilst we're on the sort of batteries, what a disappointment British Volt was.
Oh man, I know. I was such hope behind this that the UK could finally get involved in large-scale battery manufacture. But at the end of the day, you've got to have the technology, and you've got to have the orders for your products. British Volt was very early in gestation in terms of both of those key criteria. So such a shame to see that.
The trouble is, though, you've got to. I'm sorry, I blame the British government a lot. They really haven't supported this properly. If you look across Europe, there are numerous gigafactories that are already open. There are numerous that are in construction and numerous that are planned. We really did, as a government, and we've got to hope that all of our doesn't matter whether you're Labour or Conservative or anything else, monster raving loony, they're all absolutely useless at the moment at any form of long-term strategic planning. Particularly as I also noticed that it was announced that last year over 10% of the vehicle market was EV. New sales.
Well,
there is no stopping the switch to EV. It's a runaway train. It is only a matter of time before that 10% actually becomes only 10% of sales were ICE, combustion engine. It's happening so quick. So we want to be part of it. We do, of course, have Paul Atherley with Pensana, who's making a rare earth processing plant, and also the same person is. And we are acting for him on Alchemy, which is making the lithium hydroxide plant. So basically, Paul Atherley is doing what the British government should do, and good luck to him. I'm sure he'll be successful, particularly with us helping him. Just had to say that. Let's hope so. The country needs it.
It does. But also, did you see this week that WAE Technologies is opening a new battery plant in Oxfordshire? They're going to create around 300 jobs. And WAE Technologies, my recollection, is Williams Advanced Engineering. So spin out from the Williams Formula One team, and it was acquired by Fortescue. the iron ore company last year. And so, yeah, so they've announced they're going to build a battery plant. They're going ahead with it, and that's for heavy goods vehicles. I don't know if that's going to be for mining trucks, but certainly for heavy goods vehicles. So that was positive news, for battery manufacturer.
Good. Keep going.
So there we go. Yeah, keep going. Right. And staying with very advanced engineering equipment for the transitional energy markets, ITM Power.
Did you really have to bring the conversation back down?
No, I know. Don't worry, we'll get it back up again. So, appointed a new CEO. So this is the electrolyzer solutions to produce hydrogen. But things haven't worked out as expected originally for ITM, and the hopes there. But they've got a new CEO placed in December. Obviously going through operations and what's happening, and they've said that their outcome for the financial year ending 30th of April 2022 will be materially different from current guidance, lower revenue and higher losses. So sad to see, but they've got £318 million on the balance sheet. So let's hope that they can get that turned around.
Yeah, talking of new management, I see Pressure Technologies, which is one of our clients and one that we really, really like in the hydrogen storage space. I've got a new FD this week, so well done them. And talking of one's not a client of ours, but one that I know you know quite well, which again, going back onto the rather negative side, was Carrera Network Securities. You've always quite liked that, but I'm afraid they issued guidance this week and it is going to be below market expectations.
Yeah, that was disappointing to see. So that's in security.
Yeah, actually, just going back, briefly to sort of our a few sort of picks and shovel stocks type thing there. Yeah. It wasn't this week, but of course, just before the new year, Nexus Infrastructure, which we talked about a lot, did a fascinating deal where basically they sold off, well, frankly, as far as I can see, the majority of their business for a huge amount of cash to leave just a sort of civil engineering business and a lot of cash. It had a good jump in the share price, although perhaps not as much as shareholders would have wanted. But certainly, it was an interesting move. Bit of a shame for me because I like what they sold. I thought it had great growth potential, but I can also understand why they did it in the current environment. We are where we are. That one, unfortunately, is probably from our point of view, because we're not going to get involved in civil construction, has come to a bit of an end. But Mike Morris, the CEO, has definitely looked after shareholders there.
Well, yeah, absolutely. Yes, he has. And I've got to say, sometimes you've got to give yourself a pat on the back. Good spot by us, because we could see what's happening with the EV charging business that they had and how rapidly that was growing, the potential for it. So we are trying to look out for things for investors. And I think they've done a good job for shareholders at the end of the day.
Yeah. All right, ball back in your court, as they say.
All right, thank you very much. Midwich.
I thought you were going to come up with that. It's one of your favourites, and that was a very good trading statement, wasn't it?
Yeah, well, it's because I was born near Northwich, so it's easy for me to remember. No, not kidding you. But that was a good trading update. So Midwich, ticker is MIDW. They had a full year trading update, and they are a distributor of AV products. And AV products are audio visual, of course. That's displays, projectors, broadcast equipment, professional audio. And they supply all the business markets about, screens and stuff that you have in your office. People go to Midwich for businesses. And I was quite taken by this. I must admit, I was pleasantly surprised, because I know they've had a good run during, I guess quite a bit of coming back into offices and stuff after COVID and people purchasing again. But they had a strong finish of the year. Record revenue for 2022. £1.2 billion, growth of 40%, organic growth, of course there'll be some currency in there, organic growth of 20%, which we're looking closely at, and maintaining their gross margins. And that's, obviously despite an inflationary environment. And they say they will be comfortably ahead of market consensus. Now, the stock, I was just looking at it, it's trading on 0.5 sales, EV revenue multiple, P of 14 times, 13 times. So, that's pretty. It was pretty good. It was a good performance by them. A strong, decent cash generation and well funded bank wise. Yeah,
sounds like it's still a buy. So on the same day we had. There's an interesting point here. There's a lot of trading statements coming out at the moment. endless every morning. And actually, in general, it looks like UK PLC is performing pretty well. Same day as which we had Diploma, who came out, everything going well, in line with full year expectations. We had Currys come out, first 10 weeks of the last 10 weeks or whatever. Again, guidance unchanged. So they were all pretty good, weren't they? All the trading statements coming out at the moment are looking pretty good.
I really think so. And on the smaller size, what Quicksent, so that's QXT, 108 million market cap. And these guys, it's electronics hardware. They make computer systems that go into gaming machines, but also used by the broadcast industries. And they had they'd upgraded in October, but then they'd come out with a very positive trading statement as well. So that was good to see. Yeah, adjusted profits slightly ahead of market expectations. Net cash was up from $12 million to just under $13 million. So that was pretty positive as well.
Yeah, one I also spotted, you may not have done totally actually. I don't know if you looked at Oxford Nanopore. I mean, it is sort of tech, it's biotech almost. I mean, I just wish Oxford Nanopore would be hugely successful, because I think what they're going to do in terms of for us as people in the end is incredible. It will extend our lives and help make our lives much more comfortable. The whole concept of what they're doing is so good. And I just hope it never becomes a sort of Theranos. I'm sure it won't. Please don't take that as a suggestion. But of course, IP Group is highly connected to Oxford Nanopore, so that's quite good news for IP Group. And we have been, IP Group is a company that we really like, but obviously has suffered basically with the valuations of private equity firms, etc., etc., etc. But I did notice that one as well.
Yeah, an IP Group, I think at this sort of stage in the market is certainly worth a further look. I mean, regarding overall tech valuations, which they're off about 30% over sort of 12 months in the markets. But let's see. But some things have been really potentially oversold and should be looked at. But yeah, no, that was good. I also saw IQE. They had a trading update for their year end, and they produce compound semiconductor wafers that are used to make chips, and the chips go into smartphones, cameras, sensing devices, and believed to be, according to the Times, used in Apple's facial recognition technology. But they had a year-end trading update. The second revenue was expected to be about 8% higher than the prior year, subject to audit review. They went on about impact of some small provisions, rephasing of revenue from contract, and then they said that the group's trading has been largely resilient despite the environment, but they're seeing some softness in the wireless markets, and in the first half they may see destocking. I mean, it was a bit of a mixed bag, I have to say, of a statement, that one.
I saw, jumping a little bit back towards batteries, Ilika at the beginning of the week signed an MOU with the Certec Medical Partnership to collaborate in the manufacturing and commercialization of their miniature I'm going to pronounce this wrong, Stereax solid state batteries. And then they had their interims today. The MOU sent the share price significantly higher. The interims, well, the share price is down a little bit, not too much. I suspect it was what the market was expecting, but only £200,000 of revenue and a loss of 4 million. It's not a problem. They got about 18 million in cash, and it is a really interesting business. But probably the market got a bit ahead of itself on that one. And then the other one where we've had two announcements this week, which caught my eye, which was Ashtead Technology. We've mentioned this one a few times before. It is Ashtead Technology. It must be in the tech sector. But actually, when I was acting for Ashtead, I hate to say it, 25 years ago, actually I was there when this division of Ashtead was first put together and as a concept created under the watchful eye of Peter Lewis and George Burnett. That's taking you back a long time. But on Monday, they put out a trading update where they said that EBITDA was expected to be modestly ahead with adjusted EBITDA, and it's adjusted we all look at now anyway, because the accountants got absolutely mad, comfortably ahead of market consensus. So that was really good news. And then actually today it was announced that one of their major shareholders had sold about 18.8% of the company as a secondary placing, and actually some of the management did as well. I actually don't read that as bad. I mean, it's people do sometimes have to sell a position, and management, again, they've got their own lives, shall we say, to live. And so they have to do that sort of thing. But it did just knock the share price a little bit today. But again, I wouldn't read too much into that. It's a company I fundamentally sort of like.
Yeah, well, there we go. Now, here's one last one from me. But again, one we have commented on before, I think is in an interesting and sadly this is in the growth space, and this is in it's Kooth, KOOTH, and the ticker in that is KOO. It's about 50 million market cap, and they have a digital mental health platform. So it's a software platform that is it's helping the the NHS and with the significant problems with mental health that we're seeing in the UK. And they said that so this was for the year ending end of December. Revenues expected to be within range of market expectations of 19.6 million to 20.2 million, and growth of 15% compared with the prior year. High levels of recurring revenue, about 95%, and net cash at the end of the year of 8.5 million. And as I say, for very, very sad reasons, but they are trying to, their product helps. It's been driven by demand from mental health care, particularly for the NHS. They're also looking to expand into the US market as well, which they announced in October. And they said they've just signed a contract with the state of Pennsylvania for early stage rollout to cover 150,000 students across the state, and providing access for mental health support in the state. So definitely worth looking at.
Oh, interesting. Actually, we have got some more. I'll tell you why, because don't forget, we are sort of tech, trans, and brands.
Yeah.
Although, as I was saying to somebody today, we could become brands and bands. Just to explain that, one of the companies that presented at our Aquis Showcase Day, the incredible event that we had at the end of November, was ATC Group, who manage bands, in particular Radiohead and various other things. And it's actually such an interesting company. Ever since the event, I've been chatting to the CEO. He's such a nice guy, and he was also working with Chrysalis and helped get all the sort of the end game there with Chris Wright, and made a huge amount of money. People are quite popular with shareholders, and people like Schroders are highly supportive of the shareholding. And I said, yeah, well, you could become the bands of our brands and bands. So get ready, Phil. But actually, joking apart, in the brand space, and this is, and it is technology as well to a certain extent. We had a trading update from what was the Hut Group, now THG. It was, I don't know if you read the statement, it was so complicated. But the market didn't really like it. The Hut Group is still having a little bit of a struggle to really get itself back in with shareholders. But whilst talking about the Hut Group, we also today had a trading statement from S Ventures, which is a corporate client of ours. They do brands basically in the kitchen, should we say, healthy food and that sort of stuff. So a really interesting company, led by a very interesting entrepreneur who's been very successful, which is why we like it. He's just done a major acquisition actually of Javella, which does gluten-free bread. It has actually about a 50% market share of the entire gluten-free bread market in the UK. So it's all about the future, not the past. So don't worry too much about the trading statement. And of course, in our little portfolio of brand companies, worth mentioning two others. I mean, Silverwood, as you know, just before Christmas, but I'm not sure we ever really commented upon this, but we did because I think we'd almost given up. We did the incredible acquisition of basically 20% of Lush. The good news is I see Lush is a private company, but I've seen reports out that Lush had a record Christmas and start to the year, and the profits are booming, and they are very optimistic about the future and the expansion of the business. So that bodes very well for Silverwood. And on that note, I mean, this year alone, we have seen some big moves in some of these little companies involved, should we say, in brands. And in particular, Farfetch. I don't know if you noticed this one. They've had a really big move up. And one of the reasons, of course, is that they are they distribute high-end brands into China. And of course, with China opening up, people are all now getting rather excited, shall we say. Farfetch is up 21% so far this year. Going back to the Hut Group, before they put out that trading statement, it was actually up 50%. One of the things is that, that people reckon that the Chinese consumer during their extended lockdown have saved up $4 trillion, which people now think they will go out and spend. So the group that should benefit from this, I'm actually going down to see them tomorrow, but I think you are, Phil, but for a different reason. I'm actually taking investors, is Samarkand. Samarkand obviously have had a pretty tough time whilst China's been in lockdown, because they have probably the best technology in the world for selling brands into China. As we come out of lockdown, I'm expecting things to really perk up for Samarkand. The stock price obviously has come back a long way. I would say that is an absolute roaring buy at the moment, because it has come back quite understandably quite a long way, but I suspect they will have an incredibly good 2023. That's my forecast, by the way. We are corporate to them, and it's not what I think you as the analyst are necessarily saying, but I think they will.
Yeah, but all I would add is that when you say they do have very, very good technology, I mean, they do. FedEx are going to be using their technology. So it's cross-border e-commerce, enabling e-commerce brands in the West to ship into China, which is the biggest e-commerce market. But not only FedEx starting to use it, but also SF Express, which is the FedEx equivalent in China. They're a huge global courier as well. So you've got to, as always with smaller companies, look at the quality of the customers to make a judgment on the quality of the products. And they got some pretty super customers behind them.
Well, it's always good to go full circle. We started off with me talking to people in America about which companies potentially look really attractive in the UK market. I think it's fair for me to say that in America, they really do understand e-commerce. They have a lot of big companies out there. They love to sell their brands into China. The valuations they put on people who have got the ability to do it are vast. And I think it's probably fair to say that they were quite intrigued by Samarkand. I'm not saying anything I shouldn't know, I promise you. On that note, before I do say something I shouldn't say, let's call it a day. I hope everybody listening is pleased that Tech and Trans is back, because I know we've been away for a while. I'm sure you missed us terribly. As usual, if you want to send us some money, please do. No, if you want to sponsor us, please do. No. If you've got ideas, just tell us, and we're always happy to talk about it. If you disagree with anything we say, then please let us know, and we'll try and correct it. But on that note, thanks, Phil, and we'll speak again next week.
Excellent. I look forward to it as always, Andrew.